Trading is one of the trading styles that you can really use to hit those volumes. Now, I've gotten a few questions, and there's one that is really recurrent that asks, what happens if the base is not as obvious as the ones that I've shared previously on the exploit group on Facebook? Now, if you're new to base trading, I've really explained it in details on book 5, the volume book, so you're free to get a copy. Now, when we're talking about bases, I think I've also done a video on demand that has discussed the types of bases that we have. And you can have a pivot, that is a one candle. I'm going to show examples shortly. And you can also have maybe 3 to 5 candlesticks creating a base. But that is not always cast on stone. For example, now if you're new and you don't know what a base is or what you're saying, let me just give you a quick run. So for a buying cycle, you expected to have a push to the top side. Very dominant. When we talk about dominance, this is continuous green candlestick, a lot of volume being pushed to the top side. Then once it gets to an area, you find that the market is, taking a break. It's like it's trapping. There are now red candlesticks here. Remember, on the rally, you expect it to be continuous green. But on the base, you expect to have the multiple players. You expect to have red candlesticks and green candlesticks. Now, this area here is what we call the base. Okay, it's usually a short break before the market continues. And if it does continue, if the market was on a buying cycle, you expect it to continue. So this is what is called the RBR. That basically stands for rally, base, rally. Now, for the base here, it can be created by either a single candlestick. There can be just a single red candlestick here. You find a red candlestick, and these are the ones who are green, and then the market continues. So you just draw that and say that was the base. Or you can have multiple. You have a green, you have a red, you have a green, you have a red. Can be 2 to 5. Or can be 2 to 6, and then the market continues. Now, it's not always cast to stone. That is just 2 to 5 candlesticks or one candlestick. You can actually have a whole chart pattern. And that is the essence of this today. You can actually have a whole chart pattern. Now, if you're new to chart patterns, we have a video on the different chart patterns and which are high probable, which are reliable, which ones can you add to your trading. And therefore, you're free to watch that video from our channel. Now, on the opposite direction, if you're selling or if it's on a selling cycle, you expect the market to drop, to have really continuous red candlestick, and then get to a certain point where it's taking a break. Now, this break is what we refer to as the base. Now, the base again can be a pivot, can be one candlestick, just one green candlestick, and then the market continues down, or can be 2 to 5 candlesticks. So you have green, red, and so forth. Then the market continues down. But it can also be a whole chart pattern. Okay, can be so many things. Can be a flag, can be a channel, can be so many things. And that's what we'll be discussing today. Now, let's get to an example now without the drawing. As you can see on my chart here, we have this push to the bottom side. This one here shows dominance. How does it show dominance? Because of the continuous red candlestick. So it's showing that the sellers are the dominant participant. They are the ones pushing the market. But then it gets to this end, and then this shows up with an untrained eye. This can be anything. Can be a range, can be just, a buying area to reverse. You see the trick. See the trick of this bullish engulfing candlestick. Now, this one is supposed to show momentum. It's showing that the market is actually reversing. So if you're not trained, or let's say you're not experienced, you see this engulfing candle, and what do? You start buying. So in your brain, you think that we are reversing. It could be a drop-based rally. But no, it can't be that. Why? Because we are on a selling cycle. Neither are we at the very bottom. If we are at the very bottom, I will show an example where there are chances of having a drop-based rally. But in this case, we're just taking a break. And here now is an example of a chart pattern. So I don't know if with your bare eyes you can see the chart pattern. But usually what I say is pay attention to the last candlestick. And this is where you need very, very keen. Always pay attention to that final candlestick on that drop. In this case, you are going to use the drop base drop. So this last candlestick is very, very important. You're going to pick your trend line and you're going to find the low of that last candlestick and any other low from that area. You can either conjoin 2 or 3 and just draw a counter trend line on it. Now, why are we calling this trend line a counter? Because remember, we are pushing down, but our trend line is pushing to the top. So it's the opposite. A counter is a trend line that shows the market pushing to the opposite direction. And the counter trend line is one of those trend lines that you should really keep close, okay, for cases like this and also others. And of course, if you don't know the 3 types of trend lines, I'm sure I've done a video on the trend lines and you can watch that. This line is very, very important. Now, if you're graphical, there are people who like drawing so much. If that is you, again, the top, you can also draw that. And with that, you can see that is a bearish flag. Okay, it's pushing down, down, up, down, and all that. That's a bearish flag. You don't need to know all those names. All you need is a counter trend line. Whether you draw one at the bottom only or you draw both of them is still fine. Now, when you draw that, it takes out the idea, the fake idea of thinking that it's going to buy. So there is no way you're going to get yourself trapped to the buy. Why? Because once you have that channel, once you have that flag, you already know what to expect. And what do you expect? You expect this. You expect that at some point, no matter how long it takes, at some point, you expect this market to break. Why are you so confident that you expect it to break? It's because of the prior drop. That is number 1, prior drop. And number 2, the cycle. And what was the cycle? The selling. On this asset, the market is pushing down. So you already know the cycle. And number 2, you already have part 1 of the drop. So you want it to complete the move. With those 2 factors, there's no way you're going to get yourself trapped to buy. Now, with the break, on the video where I've discussed the pullbacks, I've talked about never chase the break. Never chase the break. Never join the market to the break. What do you wait for? You wait for the retest. Now, it's usually a rule that there is always a break and retest, no matter how tiny, no matter how big. Break and retest is a rule in this market. And now, again, we are really onto that trap game of the buy. Now, look at the candlestick pattern that they gave there. That is a cut of wood, and a cut of wood is usually a very strong buy reversal pattern. Now, if candlestick pattern, again, here you would have gotten yourself trapped because they gave this one here as a trap for people to buy. But was it really a buying area? No. And the second candlestick again here gave fake momentum that we are pushing to the top. But since you are already in my group or in my community, you know that we don't fall for this. No matter the fake momentum, no matter the candlestick patterns, we stick to the 2 factors, which is the cycle and the fast drop. Now, after the fake momentum, you don't join the market by this green candlestick. What do you wait for? You wait for the very most important candle that gives you color change. Now, on book 7, I've really overemphasized the importance of color change. It's very, very important. Never join the market until you get the color change, the candlestick that changes the color. Now, see, the fake momentum was a big bullish candlestick, but next to it, what did you get? You got harami, or the inside candle. And what color was that? It was bear. Now, do you chase the harami? No need to do that. Remember, be patient. So after the harami, what do? You do nothing. You wait for the candlestick to actually close. Why? Just because it shows signs of red, it does not mean that you should start selling. Give it time to close. I know now people will be like, now why should I wait to lose 50 pips? Because you don't lose anything. Why? Check this out. The next candlestick that comes after that harami, it goes back to almost 70. See that? Goes back almost 70%. So are you losing anything when you're waiting for the harami to actually close to show color change? Nothing. It goes back to the same area. Not only that, if you're very patient to see if it's going to give a candlestick pattern, which I usually really recommend in such cases, you see that the third candlestick now closes green but lower. So the next candlestick, what do you expect? It's supposed to give you a cut of wood again, but in the right direction. This was a cut of wood, but the wrong direction. This is a quarter of in the correct direction, which is pushing down. So again, you can wait for these two candlesticks, the confirming color change and the other, or you can do that entry. Or remember, when it closes green but does not close below this, it means that the next candlestick must go back to retest. I'm sure on the break and retest video, I said if it doesn't break, wait for it to retry again or to test again. And you can see this red candlestick came back to the same area. Why? Because this one was not able to break. If it doesn't break, it means it has another touch. It has another. It's expected to go back to the same area. So again, if you joined with the red candlestick, that was your cue for the next. If the market does not give you the very basic, you can always use the counter trend line. That is one example. So the other obvious base examples will be you have the drop, then we have this, then we continue. We also have a single candlestick. So these are the obvious ones where you have a single candlestick or 2 to 3 candlestick and the market continues. So these are the examples that I had given previously. So I don't need to really continue on this. Let's do the complex one. Now, suppose it was on a buy side, or if it was giving a bullish flag, how would you go about it? So on the buy side here, we expect to have rally, base rally. So here we're having the rally. Again, the rally is continuous green candlestick. They are pushing to the top. You can see dominance. How do you tell dominance? One single participant pushing the market. Single color, okay? And then you get to this top here and the market decides to take a break from that rally. Now, this is our base. But now our base is not a one candlestick, neither is it the 2 to 5 candlestick. You can see there are so many candlesticks here. So how do you deal with it? The first thing you want to do is to pay attention to this last candlestick here. So you're going to pick your trend line, pick that top of that last candlestick and any other top. Just make sure that you join 2 or 3, 1, 2, 3, and you draw your counter trend. Now, again, why is it a counter? Because the market is pushing up. We are on a buying cycle on this asset, but our trend line is to the downside. So it's counter, it's opposite. Now, you're free to just use that trend line alone and wait for the break. Again, remember, you don't join with the break. You wait for the retest. Or if you're graphical, again, the bottom of that, you can join and there you have a bullish flag. So you either decide to do it as a counter trend line only, or you can get graphical and do the chart pattern. Please kindly never chase the break. Never chase the break. There will always be a retest. Okay. And again, same thing as what we've done on the other side. You don't chase this big candlestick. Wait for the inside candle or the next candlestick that gives you color change. Color change is very, very important. Without color change, you cannot say you have the signal. Remember, so color change is very, very important because it shows change of direction. It's the first signal that direction is about to change, and also loss of momentum with the previous move. So here you have the green candlestick showing that we are done with the fake selling. We're done. Now with the color change, there are signs that we are about to actually buy. Now the next candlestick here, next candlestick gives a retest, but it doesn't break the top of that. Therefore, you know that their next candlestick must come back to the same area. This is a rule that I overemphasized on the break and retest video, that if it doesn't break, it shows that the next candlestick must go back to the very start of the previous candlestick. And here you join and you get to enjoy that rally. So that is a rally, base rally, where now the base is a chart pattern. And I'm sure there are different chart patterns. You may get the wedges, you may get the channels, you may get the flags and so forth. And I hope this video helps.